Good evening, everyone. I hope you all are having an amazing weekend. 3 days, much needed. Uh, and I hope you took some good rest and are ready for the new week and also the new OPEC cycle that starts off after last week. OPEX to OPEX, right? Like March again. A small topic I want to discuss about today is understanding timeframes and how to trade different time frame charts, right? Like the reason why I took this up is I had people come into Discord or talking on Twitter saying, "Hey, this is your 65-minute chart that you have posted. That's fine." But then 2 weeks after, they show me the same chart and say, "You said this 2 weeks back," and I'm like, "Okay, but you're looking at a 65-minute chart, which gets invalidated in a day." Sometimes in Discord specifically, I have people who do a lot of Discord hopping. Right, they come and go out. They expect a certain gains in a week or two, and then they obviously expectations don't match because sometimes market it's a rotation scheme. Sometimes you win, sometimes you lose. When you're losing as little as you can, when you're losing and making more when you're winning is when you can make it in the market, right? That's essentially what it is. So these people, specifically these people, right? Like I tend to get this question quite a bit, where I'm showing them a 5 minute chart. I clearly say, hey, this is the 5 minute chart. This is what you can expect. They come back and let me. I share that in the first hour or the second hour of the day. They come back at the end of the day, show me that little snippet of commentary that I put in, and they say, "Hey, you said this," and what the hell? So it doesn't like these things kind of don't bode well, because you have to understand the time frame that you're trying to draw information from, right? Like you the lower the time frame, the faster and more adaptive you should be with respect to your mindset, right? So that's an example that I want to show, and some things that I'll later on talk about as well is like how do you want to trade SPX, how do you want to do 0 day trading per se. People have been talking about these huge gains in SMCI that they have made on Friday and things like that. It's good. I mean, like I have seen moves like that in the market. I have caught those moves myself in the market, and they always happen. So how do you want to catch them and things like that? That's something that I want to discuss very quickly, going over a very simple on demand commentary that we had on Friday. Like I'll go over that and show you where your entry points and exit points should be, based off how the candlestick patterns are on a specific time frame. And once I get onto the SPY or QQQ on our weekly analysis, I'll also try to show you what's happening there, right? So that's essentially what I want to go over to start off with. Then we'll start off with the seasonality, and then economic calendar, the earnings calendar, and then we'll also talk about certain trade ideas that I have for this week, and we'll wrap up with that. Without further ado, let me start off with what I was talking about. Firstly, let me go on to our game plan channel. This was something that we were talking about on. Let me go. Yeah, this was something that we were talking about on Friday. You can see the date 2/16. Uh, in the lounge, we were talking about a big move coming, right? Like there was, we were waiting the entire day. There was a big move that was brewing, and then Professor Finisher, he said, "Hey, there's a big wedge that's forming." Like what does a wedge indicate? A wedge does not indicate that you are going up or you're going down. You're basically trying to see that there is a compression in the market, and then there is going to be an expansion, because market moves in compressions and expansions, right? So you are getting ready to capture a move, right? On a 0 day, especially when you're trying to trade SPX. I definitely don't try to trade SPX at the start of the day or whatnot. It's usually after I collect enough data, enough information for myself to say, okay, you know what, I can probably play SPX for you. I mean, you can't really alert these per se on an alerting service also, unless and until like I'm live streaming for you or something like that. Even then, it's quite difficult to even alert those. But then you can definitely create a system for yourself to, and the system that I'm going to talk about today will help you in different things, and I'll show you an example too. So we were discussing about this wedge that was forming, right? So then when the wedge was forming, this was what happened. We saw the wedge was breaking lower, right? So when you see the wedge breaking lower, that is when you want to enter into a trade. So what I mean by wedge breaking lower, so I do have another screenshot here which looks very good. Where should your entry point be here, right? Like you saw what the let me go back, let me show you. You saw how the compression looked like. This was the compression that was happening in the market, right? Like this is what was happening in the market. You see that there is this sideways movement. There's nice little wedges that were formed, like and breaking up above will shoot higher, breaking down below will move lower, right? That's essentially what a compression or a wedge looks means, right? So now like after I posted this, let's say a couple of minutes after, right? Like about 8 minutes, 4 minutes after I posted that, you see this timestamp here, like wedge breaking lower. That's what I was telling folks. And I mean, you could, I could alert these or things like that. It's a different issue, but then if you have a system built out, I'll show you a lot of commentary around like how people were able to catch this move. But then if you are seeing it, where is your entry point going to be? This is where your entry point is going to be, right? Like once you see that there was the close of the candle under the wedge, that is where your entry point should be. That is where you could have easily captured this move, right? There is a follow through move that will easily help you to understand that, okay, you know what, I'm ready to catch the move. And that single candle that I'm trying to point out to you there, that single candle move is more than 100% trade for you on SPX, 0-day SPX or whatnot. Or let's say you are using a different time frame, let's say a daily time frame, you still can use that for swings. If you use the 65-minute time frame, you can probably use it for an intraday for like 2 to 3 hours. If you're trying to trade and a weekly chart, you can probably go a few months out swings. So depending on the time frame, depending on how you're deriving the data, how much of data are you trying to derive, you can extend your trade for so long and talk about how valid that trade can be in that situation. So for example, when you're looking at this 5-minute chart, you can't really say, okay, you know what, I saw a breakdown and I'm going to go after weeklies or I'm going to go for a swing and say SPY is going down to 490. You can't really say that, right? Like you're looking at a 5-minute chart. It's clearly a 5-minute chart, right? So your trade should be faster. You have to be ready to adapt. So now again, we talked about a compression. We talked about a breakdown. We caught the breakdown. Now where do I exit? So let's come back here. Now you have that hammer candle that is forming. What is a hammer candle? That this is again a 5-minute chart, right? Like you see this candle here. You see this candle here. This candle, some of them, I'll go back on the Traders Lounge and try to show you those comments. Also, some of them caught it for a 250 to 300% trades. Right. So after that, where would you get out? Obviously, it went a lot lower, but I would have got out on this hammer candle. Right. Why would I have got out on the hammer candle? It's a 5-minute chart. You have a reversal candle that is showing up. So yes, there is no confirmation yet on a hammer candle. You definitely want to see some confirmation. But then for me, we don't have time. We don't have enough, leverage on time to say, okay, I'm going to wait out for another candle to see what's happening there. I can't do that. So I'll at least scale out most of my position and hold some runners, or if I have a small account per se, I will just get out of the entire position also, right? So that is essentially what you're trying to look for when you're looking for a lower time frame chart. You want to get in, get out. You have to be faster. You have to be ready to adapt yourself. And then when I saw this was where I was also trying to tell you, so again, time frames, you understand what's happening there, and you have a double hammer candle that's forming on the on SPY 5-minute chart. And like I was kind of telling people to get out of their positions. Look at what happened after. Surprise, surprise, there was a huge little a huge buy candle lit up with volume right there. And that is essentially where the panic comes in. Where usually bad traders get into those positions. This is essentially where they get into those positions where they say, oh, it's a drawdown. Then you have like a little bit of a consolidation, and premiums came down a little bit because I was seeing the premiums here. They jumped up 200% or whatnot, and now they are a little bit down. So I'll get in and they'll get out somewhere up here when there's this huge little handle. I have seen this mentality with so many traders through the last 3 years with sniper trades. It is astonishing. Like people literally are there trying to pick that trade so that they can lose based off 5-minute charts and whatnot, without understanding that the breakdown, like just a rule of thumb, if you want to think about on a 5-minute chart, how many candles is your analysis valid? For me, I only think 2 to 3 is what a valid time frame is. 2 to 3 candles is what will be valid of a particular data extracted off a 5-minute chart. If you're looking at a daily, I would say 2 to 3 days, right? Like 2 to 3 candles on a 5-minute is basically 15 minutes. On a daily, I would say 2 to 3 days. On a weekly, I would say 2 to 3 weeks. So things like that, so on and so forth. So you have to be ready to adapt. You have to be understanding. You should understand that when you're trading off a 5-minute chart, when you're deriving data off a 5-minute chart, you don't have as much data to predict what's going to happen the next day. You only have as much data to predict what's happening in the next 15 to 30 minutes, maybe. That's mostly it. So you have to understand that. Like most people just don't get it. Like plain out, they don't even get it. They just think, oh, I'm seeing this on a 4-hour chart. I'm going to say the next hour is going to do this. It probably can, but you're on a 4-hour chart, so you have to probably give it a 8 to 12 hours of time for it to materialize down, right? So the patience to hold on to a particular theory that you have developed depends on the time frame that you are trying to derive data. The adaptability of your mindset to scale out of positions also comes from the same time frames that you are trying to trade as well. So again, the same thing, right? Like once there is this break, I was talking about adapting, right? So what do you want to adapt here? Now you want to see if this downtrend that was created is completely going to be breaking out. So now we have adapted ourselves to say your next trade will be the break of the upper trend line on the calls. So once you break, this is still valid data, right? Like this is still valid data. This has been invalidated because now you had that breakdown, and it has let's not say invalidated, but it has been validated by your thesis that when it breaks down, it kind of drops, right? Like that's essentially what it did. So now you still have this particular trend line which is ready to be broken out. Like if it does break out, you can catch a move. You can basically play calls, right? So essentially what that was, you see what happened here? The candle just did a peekaboo, right? Like it barely, like it was trying to break out there, and then look at the move. Look at how clean the move was, right? So you understand how I'm trying to trade these time frames, right? Like I'm trying to say, break down 5 minute, my mindset completely changed from the first time I said we are breaking down, where I was saying that at 10:58 or 11 a.m., right, on a 5 minute chart, to 12 p.m. I'm now looking for calls suddenly. So why am I doing that? Why? Because I am working off lower time frames. My mind has to adapt itself to say, I am done with that. Now I need to do this. And it's not easy. Like, it's not easy to say, you first year into your trading, it's not easy to say, okay, I just played puts. Now I'm going to go play calls. It's extremely hard to do it. It's about trying to understand what's happening in the market repeatedly, sitting at the desk and trying to figure out what's going on, right? So that's how you want to adapt yourself to the market. And then, after that, again, I was kind of using the gex, we were talking about how the market would, the gex building at 500, how the next drop for spy to 500, that's essentially what we were looking for. But otherwise, I'll show you the exact same scenario that we were talking about on SPY on SMCI, right? Like a hot stock that was dropping like crazy on Friday. So this was almost at the end of the day, like last 90 minutes of the day. How the premiums move pretty fast. And again, on the 5 minute chart, right? Like look at how it was kind of bear flagging, and that's the bear flag that I was looking at, and it was trying to break below. That's where a few snipers, again, this person is relatively new to the server too, a couple of weeks in, and he kind of understands what's happening now, right? Like, and then he tried to play puts. Look at what happened, right? Every like you'll have so many opportunities in the market every single day that you do not have to FOMO on whatever other people are showing you. You can build a system for yourself, build a process for yourself, understand what's happening on different time frames. Just see that, I know what's happening. I know where I can put my money in. This is what my risk is. Boom, make my profit, get out. So that is essential for every trader out there. They have to understand it. And like, I'll tell you, 95% of the people who are coming into trade, or think the trading is the next big thing, they won't succeed. Like 95% of the people won't do it. Like, my own friends couldn't. Like, they are much smarter than me, and obviously they are successful in other things. They did find their niche, but 95% of the people don't do it, can't do it, just plain and simple, because they never get to the first stage of creating a process. They always want to, like, look for that next big thing, and they look at others doing it, without understanding the backstory of how they got there. And that's essentially how people get burned most of the time. And unfortunately, social media is kind of elevating that too, in a way where, we are seeing quite a few people, like, completely blowing up their accounts doing so. Like, I was someone just posted something about on an E-Trade screenshot as to how someone was in 1,000 calls of SMCI and did not sell even if they were up so much on Friday, and they were burning their account. But anyway, I hope this kind of this session is a little bit helpful. I'll try to, come up with another session where we talk about flags, and like, how do you determine the measured move of flags and things like that. If you have not checked out how I'm drawing these trend lines per se, like, the prereq for this particular video is obviously understanding how to draw a trend line. I did go over that in quite a bit of detail, actually, a couple of weeks back. The video is also available in our training channel. You can definitely look out for that. But these are some very simple techniques that you can follow. I know they sound very easy to say, but then you need to build that process to understand what's happening there, and where to create that balance of your risk reward into playing these kinds of setups. But anyway, I hope this is helpful. Just put in a line in chat or something if you have any doubts. I will try to get to that today, or anytime during the week. Usually I'm pretty active in chat as well. So with that, I will start to, let's get into our weekly flow as to how things will go the next week. So as I talk about every week, this seasonality graph is not indication of what's going to happen next week. It's basically an indication of what has happened in the past after February OPEX, right? So after President's Day, February OPEX, you usually see quite a bit of pullback in Nasdaq. Nasdaq usually starts to show some lagging factors there. So keep an eye out for that. You have Nvidia's earnings coming out also on Wednesday, so that will be a very big influential factor into this week. So keep an eye out for all of these things that are going to be there. Usually on this chart, I tend to take anything under 40 and over 60 a little bit more seriously, because anything close to 50 is basically a coin flip, right? What 43 Dow 43 kind of gives you is 43% of the time this particular day being green in the past is what is shown on Tuesday. So 43, 43, 43 on Tuesday. So basically there is weakness, but then like it's 43% of the time. So skewed towards the bears, but then it's almost there in the middle. Wednesday is definitely showing a lot of weakness with S&P with 33. So Wednesday in the past has been significantly red. I mean, 33% of the time it was green. So 77% of the time it was red. So that's something that you want to look out for. Again, Thursday there is some weakness. Friday also there is some weakness on S&P. Obviously, we like last week video also, I was saying I will be hedged into the market end of the week, which we did in our long-term portfolio. Obviously, a 100k position. I showed you the graph as to how you want to hedge your portfolio, as to what are my gains, what are my how much am I expecting to lose, and how much am I expecting to gain based off this hedge, and how I would recover from that, from the loss from my profit to gaining that from my hedge. So that's essentially what the seasonality chart tells you. This week is looking a little grim, so keep an eye out for that. Next one, earnings calendar obviously starts off with Walmart and Home Depot. Walmart has a split, so we'll see what it kind of does on Tuesday morning. I do think Walmart will do well. The market reaction, I clearly don't know, because the options flow was kind of mixed up in Walmart. HD looks like a head and shoulders pattern. We'll have to see what happens there. But HD can probably have some correction in the market. I did see some call selling on HD, so we'll see what happens there. Next one is Palo Alto Networks. Absolute rampage of a stock. Moves almost every cybersecurity name out there. CrowdStrike, I forgot the other one. There are three. So anyway, all of them move together. So there is chance to play some what we said, some proxy plays for Palo Alto. Basically, if we do well on Tuesday, we make some good money. We'll probably play some Palo Alto proxy play with ZS or CrowdStrike. CrowdStrike is mostly what I'll be looking for to play, so we'll see what to do there. Next one is Solar Edge. Solar Edge is there are a few proxy plays for that as well. You can probably look for ENPH, FSLR, so keep an eye out for that if you want to. I usually stay away from solar names in this market. If they beat by a slightest margin, they're absolutely rocketing. So so we'll have to see if there's some flow at the end of the day. We'll probably figure out what to do there. Nvidia a huge one will move all the chips. ARM is the best one to play for Nvidia's earnings. The other ones would come up to AMD, MU, LRCX, AVGO, Qualcomm, and Intel. These are the other ones that you can look for on Nvidia. But ARM is the best, I would say, to play Nvidia's earnings as a earnings proxy. Rivian and Lucid are going to report earnings at the same on the same day. Rivian, there was a huge put order that came through. We'll have to see what happens there. But then Rivian also, the dip is something that I'll be looking out to buy for my long-term portfolio. I did not sell CSPs. I do not have any positions right now. We sold them at around 20, 25, 26, right? So once we see a dip towards I would definitely love a 13, but we'll see what happens there on Rivian, and we'll figure it out. There's a big put flow that came through last week, and it's interesting there. Once there's a dip, I think there will be a bounce back up into its March event that they are holding in the market. So keep an eye out for that on Rivian here. And then Etsy is looking quite bullish. A lot of put selling that was happening on Etsy that I've seen into summer. So probably a big jump after earnings is something that we can probably expect out of Etsy. Wayfair has quite a bit of bullish flow as well going into its earnings. Block is another one that has Block. I believe it was mixed. I posted it on our game plan channel, but I'll go over that once again. But I believe it was mixed. I can't quite remember about Block. Carvana, lot of call selling on Carvana that happened last week. So probably not that great for its earnings. The chart looks quite good though on Carvana. BKNG, that's another one that you want to look out for. I mean, it's another stock. Like, Alta and CMG, these are two stocks that Alta, CMG, and Lulu. These are three stocks that never go down after earnings. Like, they always go up. BKNG also falls into that category. I don't understand. They usually go up. So if you want to play BKNG's earnings, that's what I would do as my best bet. But we'll see what happens there. Trade's very thin. I'm not quite interested in it anyway. But just letting you know with respect to how the stock kind of performs during its earnings. So those are the ones that I'm looking out for. Again, I'll just highlight the ones that I'll be looking out. Walmart, Home Depot, these come pre-market tomorrow. So based off Home Depot, we can probably play some lows also. Home Depot has much better volume on options than lows. Both are ridiculous though, so keep an eye for that. Palo Alto is definitely something that I'll look out for. If we have a good Tuesday, we have some good gains, we'll probably play some Palo Alto. And then Nvidia, Rivian, Etsy. These are a few that I'm looking out for. Block is another one that I'm looking out for. BKNG, I'll be looking out for that one as well. So these and obviously Wayfair. These are the ones that I'll be looking out for this week. See what's happening. See if there is flow. Based off flow, we'll probably play it given how the market conditions are on that particular day and how our account allows us to do, right? Like if we have a good Tuesday, like last week we hit a 200% trade on Goldman Sachs. We started using those profits into different trades. That's when you can hold on to some positions and say, okay, I can hold on to this position because I have the profits to do it, and that's how we'll try to play earnings as well this week. So we'll see what happens and we'll go from there. Next one is let's talk about our economic calendar here. Obviously today is closed and conference board, leading index, nothing to worry about. FOMC minutes, that's definitely something that you want to look out for irrespective if Powell speaks or not. Obviously Powell is not speaking on Wednesday. It's just the FOMC minutes that he has talked about last time he was out. There won't be anything new. Definitely data dependent, Obviously, we did see PPI and CPI come out after the fact, but those won't be the minutes won't reflect or will not have anything with respect to PPI and CPI that came out last week. So we'll see what happens there. But FOMC minutes on Wednesday, I'm tilting a little bit bearish because like CPI and PPI were there was a little bit of a surprise. Anything to the surprise to the upside or downside is something that you want to look out for this year. An upside is obviously a much bigger drawdown. With respect to the soft landing thesis, and that's where you don't want to look for that is where I think the market will try to digest that news before Powell comes out next time and talks about something about their plan cutting irrespective of what the data looks like and things like that. I don't think they'll say that, but then I'm definitely in a boat where I do think we will see a rate cut in June, like maybe late summer, early fall is what I think, because of the elections that are coming up also. So keep an eye out for that, and we'll see what happens there. Overall, FOMC definitely something to look out for. After that, oh my God, there's Fed. Oh wow, that's a lot of Fed that comes out, but Kashkari and Fed, most of them come out after market though, so not too bad. Which gets affected on Friday though, so most of them will get. I think it gets digested out, so don't nothing to worry about there. But yeah, FOMC minutes. That's mostly what I'm looking out for here. FOMC minutes and Nvidia earnings. These are the two things that I'll probably say are the two biggest events this week. Other than that, I don't see much. Even bond sales and bond that I think there's just 5 and 7 years, 2 years and 5 years this week. So that's not going to be a much of an impact. Usually the 10-year and 30-year are what are more important, and we'll see what happens there. But that's what I'm seeing here. Nothing major, just FOMC and Nvidia's earnings are something that you want to look out for this week, and that's mostly what I think. Now, quickly getting into the weekly our analysis on different sectors, and then we'll also talk about some trade ideas after this. On the weekly time frame, definitely we are seeing some kind of a bullish momentum that is still going on, but the last candle that came up on weekly, this is called a hangman, right? Like when I say some word, you can just go quickly Google it or chat GPT it or whatever, and you'll see quickly, like visuals as to what a hangman pattern is, what a hangman is. A hangman is basically a reversal pattern, right? Like you see a hanging man on at the top end of the rally, right? That's essentially what happens in the market. So this pattern usually tends to create some kind of a reversal, and obviously we are seeing a weekly time frame. Remember what I was talking about in the beginning of this video. We are not talking about a 5-minute chart. We are talking about a weekly chart. A weekly chart tomorrow, if you if someone comes out to me in the morning, the first hour that we start trading, if someone comes out to me and says, oh, we did pop to over 500, you were talking about a hangman pattern, and why isn't the market down? It doesn't make sense, right? Like, we are talking about a hangman pattern on the weekly time frame. On a weekly time frame, when I'm talking about a hangman pattern, you have to give yourself some time. You can't look at the weekly chart here and start to play 0-day SPX. Yes, it can work. I'm not saying it won't work at all. It can work, but then when you're looking at a weekly time frame, you give yourself some time. You have to have that patience for the pattern to develop itself and move down. And I'm not saying, oh, you know what, 10 weeks from now I'll come back to this video and tell you that, oh, I saw the hangman pattern and that's what has created this drawdown when we are trading at 525 or 530. Not saying we will trade there. I'm just hypothetically telling you, if we do see that, and from 525, if we drop down to 520, I'm not going to come out to this video and say that, right? Give it, like, at least give it a couple of weeks. when you're looking at a weekly candle, give it a couple of weeks. Give it a couple of weeks for that drawdown to happen, for that to realize the entire move of that pattern to develop, right? So that is essentially what I'm trying to tell you. On a weekly time frame, you have a reversal pattern that has formed, which is a hangman pattern. And on a hangman pattern, it can definitely try to reverse here. There can be a little bit of a downtrend, there can be a little bit of a retest of, like, the market just can't keep going up, right? Like it has been doing really well, right? We are still creating that higher highs and higher lows, nicely moving really really well. This can be a higher low also, because of how we have created that consolidation right under the all-time highs of 2021 or 2022 January. And after that, we just chugged higher. Like, we have been making a new all-time high every week, right? So what I generally would expect is come back right back down to 480 and then go right back up. This is a very very healthy setup. That's where we create another higher high, we create another higher low, and then we create another higher high. And that's essentially how a bull market kind of works. And I do think that is the setup that we are going after as well. So keep an eye out for that. Just because there is a drawdown, I'm not saying, oh, we are going into a recession, or I'm not going to ring bells and say SPY is going down to 300 or 200 or 0 or whatnot. That is not how it works. You have to be cognizant as to where the next level of support is, and if that level of support is broken, is then when you extend your price target. If you see most of my tweets, most of my analysis, I always talk about price target 1, extended price target, price target 1, extended price target. So up and down, both sides, you can have your price targets based on how your resistance and supports break, right? So that this is the pattern I think we will see in the next few months to a couple of quarters, where we go retest back this zone around 480 to 475 ish. I'll go on to the 65-minute chart, then we can probably talk about a little bit more granular setups that might come up. But on a bigger scale, like, I think this is the path that the market is going to take, where like, we will see a little bit of a pullback to the previous all-time highs, not exactly to 480 obviously, somewhere close to 480, and then create that lower high and then head back higher. So that is what I think. Well, probably a 5 to 7% correction is what I expect this year. I'm not expecting a correction over 10%, given how the momentum of the market has shifted and how things are looking. But that is what I think. Like, the 480 retest is going to be a very healthy retest, and it will be a higher higher low retest, and it is good for the market in the long run. Where we test the previous all-time highs as support, like, we tested that resistance again, resistance, we bull flagged here, and then we broke out. Now test that as support and run it back up. So that is essentially what I'm looking for on SPY for the next couple of weeks. So the next one here, right? Like, we did talk about, again, the time frames. We talked about weekly, where we had the hangman pattern, and we were talking about a couple of weeks out, how the journey might be, a few months out, how the journey might be on SPY. Here on the 65-minute chart, you are essentially looking for a play on intraday to about a couple of days, right? Like, you are basically looking for weeklies, going from today to tomorrow, how the market might look like once you have a confirmation candle, and how things might go, right? So this is the rising wedge that I had drawn previously, and looking for what might happen here. And interestingly, on Friday we did break down, and you see how we kind of broke down here, which can be our entry. We lost 500, and then we started moving lower. So now, where is the next support that I'm looking for here, right? So the next support that I'm looking out for is somewhere around 498 definitely, right? Like if you look towards the left, see some consolidation. There was some kind of a basing pattern that was created, which was acting as resistance before bulls could have broken out, and that is essentially where I'm seeing the next level of support at around 498. The day we break 498 and close under on the 65-minute chart, we'll see 494. It can be the same day, or it can be the very next day as well. So if on Monday, if on Tuesday, sorry, today is Monday and it's a holiday. If on Tuesday we see 498 break and closing under, I would probably swing some puts on SPY and think about 494 as my target. And I wouldn't be calling 489, 491 or per se. And intraday on the fill of this sorry, that's too big, of this bull gap here. Once this bull gap kind of gets filled, that's where I'll be a little bit more cautious, playing, probably looking for a dead cat bounce. I wouldn't be playing a dead cat bounce at that point, but if I do catch the 498 to 494, I wouldn't be playing the dead cat bounce. But then if I do see 494 holding and I did not play the 498 to 494, I'll probably play the dead cat bounce, because you need to make money. If I need to catch one of those moves and to make money. So 498 loss, 494, that's my target. 494, you probably will see a dead cat bounce. There is dual support that is happening there. You see the base of the price action there, and then you also have the bull gap that is open. So every bull gap that gets closed will act as a strong support. And something that you always also want to know is you definitely want to have some bear gaps that are open for more than a week. Once you see bear gaps that are open for more than a week, you would probably want to be a little bit more cautious in the market as well, trying to go for some call swings. So remember that these are some things that you would want to look for to be more cautious in the market. Until then, you can probably play some intraday buy the dip scenarios. But that is one scenario that I'll tell you. If a bear gap is open for more than a week, you will probably see 2 to 3 more bear gaps that will open up in the following week. So something to remember, something to look out for, and we'll see what happens there. But Friday we did see a breakdown, probably a 498 retest. 498. If we see a bear flag at 498. That is where I would probably think we'll see a little bit of a faster pull back towards 494. And if we do see 494 loss, we'll see 491.50. Can we see all of these in 1 week? I do not know. I'm looking at a 65-minute chart. All I can tell you is Tuesday looks like we can see some kind of a continuation towards 498. If 498 breaks, we'll see 494. So these are my levels that I'll be looking out for this week on SPY. So keep an eye out for those, and we'll see what to do after that. Next one is, let's go back onto the daily on QQQ. QQQ, the bear gap is still open, was not closed on Friday, unlike SPY. And we did close really weak. Once we lose 430, probably a quick drawdown to 425, and then there's a bull gap that is open at around actually there's a little bit of a bull gap that is open around 428ish, but other than that, 425.50 is where you would probably see a pullback. 440 was my cap of the rally on QQQ. We almost got there. I mean, I was operating on blue sky territories, so 80 cents, pretty good error rate, I would say. But this is a nasty looking candle, a bearish engulfing candle. It kind of engulfed almost 2 days worth of gain there. I mean, obviously there's about 50 cents, but 430 break is definitely going to look for 425s, I believe, on QQQ here. So keep an eye out for that. Next one is IWM. This one was very, very interesting, how it kind of moved. We had that little break on IWM, went up, and the next day we had that huge gap down, and it found the support at that lower trend line. found support at that lower trend line at 193 and started chugging higher, and again hit that 205, which is like I don't know, like do we take this like a double top kind of scenario? I really can't say. Given the PPI was kind of bad. We did not see any bad candle like QQQ did on IWM. So we'll have to figure out what happens here. Do we see some kind of a rotation in the market, and does IWM stand a chance to break out of 205 towards 209 to 212? Yet to be seen. But inside candle, nice little compression that's going on. Probably a retest of 199-ish on Tuesday is possible on IWM. 199, 196. These are your two levels to the downside. If 205 breaks, I do think we'll see 209, 212 with a lot of consolidation that has happened on IWM with all of this. Let me see if there is another pattern that we can look for. Yeah, I mean, can you probably say this is an inverted head and shoulders? Um, uh, yeah, I wouldn't probably say that. With the neckline here, right? Like that's your neckline. No, actually no, that's your neckline. So yeah, it's a very very complicated. I would be forcing anything if I said that. It's just this wedge that's there. Look for this lower trend line here. If you have a break and close under this lower trend line, um, I do see a possibility of seeing around 178 to 180 on IWM. Look for this lower trend line. If you want to play anything bearish on IWM, you want to see this lower trend line break and close, and that's where you'll have a very good opportunity to play IWM to the downside. I did see a huge bet on CRE, the regional bank index, on puts. So I mean, IWM is definitely a heavyweight, heavily weighted with regional banks, right? So that can be something that can influence a downside move, but I can't really guess anything here on IWM where like you if you break this trend line lower, break and close this trend line lower is where I would probably look for some bearish bets on IWM. Right now 205 break is looks more possible and probable here with a retest of 199. That's what I think. Tuesday, if we see a retest of 199, probably see a bounce back towards 202, 205. Once 205 breaks, 209, 212 is mostly possible on IWM. We'll see if there is that money rotation that we'll see, and we'll probably figure out what to do then. So that's mostly about IWM. Next one, I would do want to talk about a few trade ideas. I won't go over all the core list of companies out there. The first one is FedEx. I know there's earnings that are coming up, not this week but next week. FedEx is very interesting here because I was looking at this RSI, and FedEx does this quite a bit, right? Like whenever it does this quite rarely, and when it does a very good job at bouncing up. And this is the bullish divergence that I'm seeing on FedEx, right? Like you see a lower low on the price, and almost an equal to a higher low on the RSI, which gives you a bullish divergence. And breaking about 239, I think 245 is quite possible into its earnings on FedEx. So keep an eye out for that on FedEx. And this one has been moving opposite to the market, meaning there are some stocks out there like UPS, FedEx. I'm seeing Tesla do the same, where the index goes down and these stocks bounce. It's like Wix. There is quite a bit of opposite action that's going on with these particular stocks. So keep an eye out for FedEx. I will post out a trade idea on FedEx as well. I hope you also got those trade ideas that I'm posting on Beto. What's the other one on Riot. I did post one on CLSK. I'm quite bullish on Bitcoin. I will catch a big move on Bitcoin, and I'll show you what I'll be doing in my Roth as well next week. My Roth is I know quite a few have been following the Roth trades as well. I probably take one a quarter, right? But again, this quarter will take one more too. Again, these are all swings. Probably I'll go after Beto, or it's either Beto or it's going to be CLSK. Either or, I'll post that out. We are sitting at 192, so probably we'll go for a 10% position size on the of the portfolio on it. Again, this account grew from 12K all the way to 194, 190. At one point it was 198, 190 plus, just on like about 11 trades or so. So and we started it last year. So I'll show you what I'm doing next week. We'll see what to do there. I'll probably take a 10% of the portfolio position again. Just hold it to hit a big win there on CLSK Riot or Beto. These are the three things that I'll be looking out for going into the halving episode that Bitcoin will be having pretty soon. So, but anyway, I'll share a trade idea on FedEx as well. I completely forgot this week, but this is something that I'm looking out for this week, and one of my trade ideas for this week as well. So keep an eye out for FedEx. UPS is another one that I was looking for when I look for FedEx on the bullish divergence. We did see that downtrend break, and there's this huge gap overhead that can potentially be filled. This vacuum can go all the way up till 157.50. So keep an eye out for that. Like their first level is 153.50, and after that is 157.50. So nice break of the wedge also with some volume. So probably a retest of this wedge to higher is something that I would be more interested in. But if it is going up with momentum, we'll probably try to trade it as well. But mostly I like FedEx, and I'll probably play a swing trade on that. But UPS is also something that has created that peekaboo setup to move higher towards 153.50. That's my first target there. So keep an eye out for that. Tesla, I think we talked about this as well. We had a trade idea for 205 calls on Tesla for 3-1. Inverted head and shoulders, like you can probably look for probably see what I'm talking about. This is the shoulder, this is the head, this is the second shoulder, and then this was the neckline, and we did break out, right? Like, so now what is the where is Tesla headed? Basically this is the measured move of Tesla, right? Like from the neckline to the head, which is somewhere around $20. So $20 from here, which is around 216. This is what happens. So 208, 216. The 216 is obviously the measured move and the extended target here. 208 is your first target on Tesla. So keep an eye out for those two targets here. If you ask me, do you think Tesla has bottomed? I do think yes, because of that huge TSLL call flow that I showed you, $37 million. They are sitting now at around $54 million. So we'll see what happens. But they are still in the position, and up about 80-90%, I think. So keep an eye out for that. We did sell CSPs on Tesla. I will figure out an entry for Tesla as well on our long-term portfolio, and I'll let you know. But right now just CSPs. That's all I have. If you can't sell CSPs, that's where I'm sharing you that swing trade ideas as well. So you have both your targets, 208, 216 on Tesla, and keep an eye out for that. Next one, let's. I had a few more that I wanted to talk about. Yes, AMD. AMD is another one that I have on watch because AMD has analyst day tomorrow. Usually analyst days, if Lisa Su is going to come on for this analyst day, she knows how to pump the stock up. So 180s is possible early in the week into AMD's earnings. And we'll have to see what happens after that, after AMD's earnings. But I will be looking out for a little bit of a bounce here on AMD on this retest of this trend line, and probably the 174 level, probably a little bit of a retest towards 180s, and after that head back lower, maybe after Nvidia's earnings. So this is another one that I'll be looking out for earlier in the week to probably take a trade on. So keep an eye out for that. Next one, that's mostly what I had. I will just as always, post out those pre-market trade trading notes, and we'll go from there. But yeah, that's all I have, and I'll see you guys in chat. If you have any questions, please let me know. I'll try to answer them as best as I can. And I hope today's session was helpful and you understand what's happening with respect to different time frames, how fast you want to adapt yourself, how fast you want to scale out, scale in, have patience on, etc., etc. And hope you had a wonderful weekend as well. And